This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, July 20th, 2015. Euro dollar. So the key level to watch right now in the euro is 108.19, which represents the 27th of May low. A break below that level or a close below that level on Monday would open the door for a fresh downside extension towards the 2015 multi-year base at 104.62 from back in March. At this point, only a break back above the high that we saw on the 7th of on the 10th of July, which comes in at 112.16, would compromise or take the immediate pressure off the downside. Sterling dollar. So cable is looking more constructive of late, with the market putting in a higher low potentially now by recent lows that we saw at 153.50 and ahead of the next major upside extension back above recent highs in the form of the 2015 peak at 159.30 from the 19th of June. A break above there would open the next major upside extension, while only back below that recent low that we saw at 53.50 would compromise or take the immediate pressure off the top side. Dollar yen. So at dollar yen at this point, we could very well be in the process of having carved out a higher low by that recent low that we saw back on the 8th of July, which came in at 121.30, ahead of a bullish resumption back above the recent multi-year high from earlier this year at 125.85. At the same time, the market is coming into some stiff resistance in the 124.50 area and ahead of 125, and we could also be putting in a lower top ahead of fresh downside and more correction in this market. Monthly studies in dollar yen are still overbought and show potential for a pullback, but at the same time, the uptrend does remain firmly intact. So it's a question of higher low right now or lower top, and we'll have to wait and see how that plays out. Euro Swiss continues to look quite constructive, with the market now trying to break back above recent highs at 105.75, which will expose a retest of the February peak at 108.15. At this point, only a break back below 102.35, that low that we saw going back to the end of May or mid-April, would compromise the bullish or recovery outlook for Euro Swiss. Aussie dollar. So Aussie remains confined to a very well-defined downtrend, with the market at risk for a fresh drop now down towards a measured move objective in the 70 area, which is a major psychological barrier. At this point, we need to see a break back above recent highs that came in back in the mid-June, on the 18th of June, around 78.48, 78.50, to really take the immediate pressure off the downside. However, the daily studies are looking a little bit stretched, so there is risk for a bit of a short-term bounce in the sessions ahead. Dollar CAD. So dollar CAD continues with its bid tone, breaking to fresh multi-year highs, taking out the previous 2015 peak at 28.35 and on its way up what it looks like to be the 2009 peak at 130.65. At this point, any setbacks in this market should be very well supported ahead of previous resistance now turned support in the 126 area. It is possible, though, with daily studies a little bit stretched, that we do see a bit of a pullback in the sessions ahead. And Kiwi dollar. So Kiwi has seen some dramatic declines in recent sessions, with the market locked within a well-defined downtrend and finally taking out a key psychological barrier and measured move in the 65 area. But again, daily studies are oversold here, so there is risk for a bit of a bounce before we see any renewed downside pressure. Any rally should, however, be very well capped ahead of 67, while only a break back above recent highs that we saw at 67.70 about would take the pressure off the downside. SPX 500. So the S&P 500 has pretty much stalled out since posting record highs at 2137 back in May, but the market has put in a significant rally in recent sessions that could threaten this toppish outlook. A break and close above 2137 would open the door for fresh upside in the S&P 500 and open the door for a potential move up towards 2200 and fresh record highs. However, inability to close above or break above 2137, that May record peak, would put the pressure back on the downside and expose a retest of that critical March low at 2040, a break below of which would be required to really confirm the toppish outlook and accelerate declines. But right now, over the coming sessions, it will be important to see how the market reacts towards that 2137 record peak going back to May. Gold. So gold is broken down to yet another fresh multi-year low, with the market taking out the 2015 base and the 2014 base last week to now trade down to as low as the 1129 area. At this point, the breakdown could expose a fresh downside extension towards major psychological barriers at 1000 further down, but at the same time, with daily studies looking a little bit stretched, there is risk for a bit of a bounce. But we would need to see a break back above 1175 to take the immediate pressure off the downside in this gold market.